Some people might be at work. Sometimes some people are at work, so they can't really turn it on. So that's fine.
Okay.
Yeah,
Okay,
I'm actually
Thank you.
preparing, then I'll be going to work. So
All right. Hi, guys.
multitasking. Hello.
No problem. Hi. Because for me, it's thank you. I like visuals. I like to be able to see the people
Okay.
I'm talking to because
Okay.
you want to know that the message you're passing across resonates and that people are getting it and not just you're talking in
Yeah.
the air. So if
Okay.
anybody's
Yeah.
able to turn on their camera, please do so. That helps a lot.
Yeah. I'm sorry, but I'll be turning mine off after so I could dress up to go to work and drive. But
No
I'll be
problem.
listening in. Yeah. Thank
No
you.
problem. Okay. Hi everybody. So Minette reached out to me yesterday and then earlier today just to say, okay, you guys would like to hear more about taxes. So this is not about me. This is more about you. You're all here because you want to hear more about how to get ready for your taxes. And the experience that I have is something that could be beneficial to your group as a whole. Just a little bit about me. I'm an accountant, financial coach. I own my own business. And I have been doing this for more than 15 years, like Minette said. And so there are some questions that, like, there's a lot of information that I could share, but I want to make it more relevant to this group specifically. So if you guys are able to just briefly on the chat, just let me know if you're an employee type 1, if you're a sole proprietor type 2, and if you are a corporation, hit the number 3. I just want to take a quick survey of where everybody is at. If you're an employee, type the number 1 in the chat. If you are a sole proprietor, type the number 2. If you're a corporation, type the number 3. If you're a mix, type the number 4. Okay, a lot of people are corporations. Perfect. Okay, so when it comes to taxes, of course, there are 3 main categories of people. There's employees, there's sole proprietorship, and there's corporations. So I'm going to start first with the deadlines that you need to be aware of, because even though we have corporations, us as individuals still need to be able to file our taxes. And so the first important deadline for each and every one here is the RRSP deadline, which is the 1st of March. That means if you want to minimize the amount of taxes that you personally have to pay, you want to be able to put some money into your RRSP as soon as possible. That's assuming that at the end of the year, you would be having extra taxes to pay. My philosophy is, instead of paying the government extra, why don't you pay that towards your future self? And the only way you're going to know if you will be owing government is if you are able to do like a tax estimate of your personal income taxes. So that's one thing that, although there are not many employees in here, that's one thing that you might want to think about. If you get a salary, even if you get a salary from your corporation, you might still want to think about optimizing that so that you don't pay a lot of taxes. The second group is a sole proprietor, but nobody mentioned here being a sole proprietor. So we're going to focus more on the corporations and the mix. One person said it's a mix. It's a mix of what? Just clarify.
I'm sole proprietor and incorporated, and I'm also employed full time.
Okay, perfect. So RSP works for you. We want to think about the tax payment deadlines. The deadline for everybody regular people, employees to file their taxes, the deadline is April 30th. But because it falls on the weekend, then the deadline becomes the 1st of May. The filing deadline is April 30th. The payment deadline as well is April 30th. Whether you are self-employed or you are an employee, your payment deadline for personal income taxes is April 30th. Now, if you're a corporation, your corporate income tax depends on your fiscal year end. So as a corporation, you get to choose the date of your fiscal year end on the first year of filing. And after that, it becomes the same one. So for most people, they go with the date of December 31st as your corporate year end, but it doesn't have to be. You could choose any date as your corporation year end. But once you've chosen that date, then it becomes the fixed date by which, like, it becomes your fixed fiscal year. Now, your deadline when you are a corporation, if I'm going too fast and you have a question in anything I said, please put it in there. I know we have a limited time and I want to get as much information out there as possible. So if you're a corporation, your fiscal year end depends on whatever you choose, but once you've chosen it, it stays fixed. Now, as a corporation, your deadline for filing your corporate income taxes is 6 months from your year end date. Whatever your year end is 6 months. But if you owe taxes, you have to pay the balance within 2 months. I think federal is 2 months and provincial Quebec is 3 months, but I need to be very specific about the deadlines. Again, this depends on your own structure. Now, one thing that is going to be relevant to every single one here is when you think about getting ready for your taxes, you want to make sure that your bookkeeping is done. That is something that a lot of people ignore.
Come here.
Was that a question?
Come here.
No, sorry, they're just they're not on mute. I'll tell them
Okay.
to mute.
Okay. So one thing you want to think about when you're planning to do your corporate income taxes or sole proprietorship, you want to think about the bookkeeping. So the first tip is have a separate set of records for each of your things. You have a sole proprietorship, even though it's under your name as an individual, you want to keep a separate set of records for that. You want it to have its own bank account. You want it to have its own bank account, its own credit card, its own things. That way you are separating yourself from the business in a way, because even though at the end of it, it's all going to come back together. But if you want to do your bookkeeping, or if you want to give your bookkeeping for somebody else to do, the easiest place to start, of course, is to have that separation. Now, when it comes to some expenses that you all need to think about, home office expense is something that you should be deducting. There's home office expenses, there's car expenses. Home office expenses, does anybody here have an office, or do you all use your houses as your office?
I use my house.
Okay. If we use our houses as our offices, think about the fact that if you were renting an office, you would be paying rent to that office, and that rent becomes a business expense that you can deduct on your taxes. If you're using your house, there is equally a consideration for you using your house that allows you to be able to do those deductions in your business. Now, that is different if you own your house or if you rent or if you're renting. If you
Is there
own
a tax implication for
Yep.
owning a house on the insurance? Like, do you have to then let your insurance know that the house is also used partly for a business?
Nah. No, you don't. So do clients come to meet you at your house? Like you're in healthcare, you're a nurse. So do you see patients at your house, or it's more just
No.
like your office space?
Just the office space.
Okay, so no, you don't.
Okay.
If you're seeing patients at your house, then now you have to start thinking about the business, like liability and stuff like that.
Okay.
Can we mute ourselves if we are not talking? Thanks. Yeah, that makes sense. So to think about home office expenses, there is a distinction if you're a homeowner or if you're renting. If you are a homeowner, you're able to deduct your property taxes, your school taxes, your interest on your mortgage. If you are a renter, you're able to deduct your rent. That's the main distinction of what you can deduct. Like that's the main, everything else will be the same, but the distinction between owning your house or renting are the additional deductions you can take. If you're renting, we're going to consider part of your rent. If you own your home, you are not deducting the mortgage amount, you're deducting the interest on the mortgage. Now, where can you get that information? At the end of the year, your mortgage company should send you a statement of your mortgage payment that you made throughout the year. And it's going to show you how much interest you paid and how much principal you paid. Now, the interest amount can be deducted. In addition to that, property taxes, school taxes, like I said, and then whether you're renting or you own your house, these other expenses you can deduct in general. Utilities, so hydro, heating, electricity, and stuff like that, you can deduct that. Internet, repairs and maintenance, insurance on your home, like whether it's property, like insurance on your home or renter's insurance, you can deduct that. Your phone, for cleaning supplies and things like that. But all of that is in proportion to how much of your home is being used for business. And that is a calculation that your accountant would do for you. How much of your home is being used for business. Now, the CRA would generally, CRA being the Canada Revenue Agency, they would not generally not come into your house to look to see if what you're saying is the truth. but they have the right to if they suspect that information you're sending out there is incorrect. And so some people go crazy about, okay, I'm deducting this, I'm deducting that, and yes, it's business notes. You have to be very specific. And so it's not often that they would want to do an audit, but if they wanted to, they could. So that's why you have to be very careful about the things that you then deduct. Best case scenario is you have a room dedicated in your house that you're using as your home office. That way, the portion, say, let's say it's 1/3 of your house, or 20% or 30%, for example, whatever number you end up determining based on the calculation that is done. If 30% of your house is being used for business, then 30% of all those expenses are listed. You're able to deduct that in your business as a sole proprietorship. If you're a corporation, it's kind of different. If you're a corporation, the better thing to do would be to go with a reasonable amount. And reasonable amount in general, like for most of my clients, we go with the amount of like $300 to $400 a month as your home office expense. And so, but now again, that's going to depend on every single person. It could be different. And so that's why when you're talking to your accountant, they need to look at this and check this information for you on what makes sense in your situation. But let's say 30% of your home ends up being the thing, and then we calculate and it looks like 30% is about $300 a month. $300 for the 12 months, that's what gets deducted as your home office expense, which you deduct that, it's deducted as a regular business expense in your corporation, and you're not claiming that as an income for yourself. On the sole proprietorship side, it's deducted directly on your tax return. Now, if you're a sole proprietor, the form that you would have to file within your taxes is a form called T2125. That's a statement of business income and expenses. It's a form called T2125. On the corporation side, you're filing a separate tax return, which is the T2. And in the T2, there are lots and lots of different schedules. So for most of you here, you said you're corporations, so you already know what your year ends up. First of all, is this your first year of business, or you've already set up your corporation and you have done taxes before? If it's first year of business, just type a 1 in the chat, please.
Okay.
If it's your first year of business, type a 1. If you've already done a year end, type a 2. 1, first year. Okay.
Majority of the group at large, it's their first year.
Okay.
Mhm.
So have you guys already chosen? Did you already choose like your fiscal year end or no?
Most
No,
people
not
don't even
really.
know that they have to choose.
Okay, but they got, and how did you incorporate? You got somebody to do your incorporation for you, or what? What was the process for each of you?
So the general thing is that most people learn that they need to incorporate throughout their interest of joining travel nursing. So they get incorporated, and then so that can be anytime throughout the year, throughout the whole group.
Okay.
Some people might decide to be incorporated maybe in November last year, or maybe in January last year, or in July last year, depending on when they had the interest of going on the journey.
Okay.
And some people, they don't even know, like, they don't yet, like, most people in this group, they're new to most of the information that you're going to tell them. And some people, why they might be aware from their other experiences, they are still not yet versed when it comes to taxes as a whole.
Okay.
So there's lots of virgin knowledge here to so many people, to the group at large.
Okay, that's very useful. So when it comes to, like I mentioned from the very beginning, there is so much information when it comes to taxes. And this session here is not going to give you as much information as you need, because it's too much information for one sitting. But if you have like a specific question as I'm going along, please drop it in the comments. If there's anything that has come to your mind that you wanted to ask an accountant, drop it in the questions in the comments and I will get to them. Someone is asking here, is this information for Ontario only? No, this is for Canada as a whole. I'm actually in Quebec. I'm actually based in Quebec, and this information is for Canada as a whole. There are certain things that are very specific to Quebec, But besides that, most of the information is general to the whole of Canada. So you have to choose your fiscal year end. Your fiscal year end, the longest you can go is 53 weeks for choosing a fiscal year end. You can do shorter than that. So if you incorporated your business in November, for example, you could, and you want the year end to be like to go the same like December and everything, then your first fiscal year end you have to file will be December 31st of 2022. That would only be a 1 month thing. But the longest you can go would be to November of the next year. And so your fiscal year end becomes November of every single year, depending on what you choose. So you have that liberty to choose it for the first year. And once you've chosen it, it stays the same every year going forward. One other thing that you guys will need to pay attention to is like some additional deductions that you can take. So because you have a corporation, if you have a car, for example, you're able to deduct expenses for your car through your business. But in order to deduct that, you have to track your mileage. Okay, so for sole proprietorship, all of these expenses that I spoke about, if you're a sole proprietor, all of those things get deducted on your personal income taxes. When you're filing your tax return, it gets deducted on the business schedule in your personal income taxes. If you are a corporation, all of this get deducted within your corporation. My assumption is that as a corporation, your corporation then is going to pay you a salary. Because when you have a corporation, there are just two ways to take money out of it. You're either taking money out as a salary or you're taking money out as a dividend. If you're taking as a salary, your company becomes your employer. And so your company has to withhold taxes and remit those taxes to the government on a monthly basis from payroll taxes. If you're taking as a dividend, then at the end of the year, your corporation has to issue you a T5 slip, which is a statement of dividend income for the amount of money that your corporation paid to you. If you're a sole proprietor, you take the money as you want. The money you pull out of your company is not an expense. It's the money, okay, say you make $100,000, for example, within your sole proprietorship. And your expenses come down to, let's say your expenses within the business come to $30,000. You have $70,000 left as a profit in your corporation. You are going to pay taxes on the $70,000 in not corporation. So let me take that again. If you're sole proprietorship and your sole proprietorship makes $100,000 and its expenses are $30,000, that sole proprietorship's profit would be 70. The 70 is what you're going to pay taxes on as an individual. Now, because you are an individual or sole proprietor and no taxes were deducted at source, now you would have both the employer and the employee portion of taxes to pay when you file your taxes. And that's what happens when some people, when it's their first year of doing a business like this one, as a sole proprietor, at the end of the year, they have a huge amount of taxes to pay. And they're like, okay, how come I have to pay so much taxes? It's because nobody deducted any taxes for you while you were earning your income. That is one thing that a lot of people find very shocking in their first year of doing business as a sole proprietor. Now, an important distinction to make there is, if you were a corporation, that corporation made the same $100,000, had expenses of $30,000. If you decided to then pay yourself a salary from the corporation, the salary you pay becomes an expense within the corporation. Now, let's say you pay yourself $50,000 of salary within your corporation that made $100,000. There's 100 of income, there's 30 of expenses, there's 50 of salary, which is also expenses. Now your profit in that company is 30,000 plus or minus of the amount of corporate income, plus or minus the amount of payroll taxes that you would have paid. The taxes now that your company has to pay is on the $30,000 of profit, instead of paying taxes on the $70,000 of income. Mm-hmm. So the corporation would pay less taxes overall than if you were a sole proprietorship and you were paying, and like you were not incorporated. Now, this scenario doesn't make sense for everybody. Some people are better off being corporations, some people are better off being sole proprietorship. The determining factor for that is an individual thing, like what's your overall situation, what makes the best sense in your situation. If there are any questions, please go ahead and pop them, because there's more and more information coming to my head, but I don't want to just bombard with so much information when it's not making sense to anyone. A question here, my fiscal year is November, but I will file as a loss. If I file tax for last year, then I can make my fiscal year January to December instead of November of every year. Can you explain salary incorporation again, dividend versus payroll? Okay. Your salary in a corporation, your salary is an expense to that corporation. If you are not a corporation, you don't have a salary like as a sole proprietor, even though you're taking money and spending, that's not a salary. It's your profit from the business, because there's no distinction between your business and you as a sole proprietorship. So all the income is yours. And so you get to pay taxes on the full thing. If you were a corporation, income 100,000, expenses 30,000, you have a gross of 70. Now let's say you pay yourself $50,000 of a salary. Did I mix my words? 100 of income, 30 of expenses, you have 70 of gross profit. If you paid yourself 50 out of the 70 as a salary, your taxes would be on the $50,000 as an employee, and your corporation gets to pay taxes on whatever the difference is, the net profit in the company. Overall, that is a scenario that makes sense for most people, but it has to come down to what's your situation as an individual. And you guys are free to contact me right after this. If you wanted something like one-on-one for me to explain certain things to you, you're free to contact me directly after this. What if taxes were deducted before being paid to the incorporation? What do you mean by that? Taxes, there are different kinds of taxes. The sales taxes, there is payroll taxes, there's corporate income taxes, and all of those are taxed at different levels. Taxes are not deducted before being paid to a corporation. Or even, I'm not sure, so what kind of taxes are you referring to that are being deducted before being paid to a corporation? Can you clarify that for me, Amma? My contact information, Minette, can you share my contact information with everybody in your chat? But here is, you know what, I'm gonna put my email. That's my email address right there. Are dividends also considered expenses to corporations? No, dividends are not expenses. A dividend is a distribution of profit, which is not an expense. And so if you pay taxes on the profit, and then whatever the retained earnings are, that is what can be paid out as a dividend. I need to pay dividend, not payroll, to avoid CPP. Okay, dividend is taxed at a different rate. And once you pay a dividend, of course, you do avoid the CPP. But also, dividend doesn't entitle you to be able to contribute to an RRSP, because dividend income is not considered earned income. For you to be able to contribute to an RRSP, you need earned income. And that is only dividend is not one of the sources of earned income. And so it has to come down to what actually makes sense in your situation. But that's a great question and or great comment. Are dividends considered as expenses to the corporation? Okay, I answered that. What if taxes were deducted before being paid? So Amma, can you clarify what you mean by that? What if taxes were deducted before being paid to the corporation? And then I'm going to go back to the dividend versus payroll. So payments on payroll are expenses in your business. Payments that are made as dividend payments, they are not expenses. So you would pay taxes on the money, and then whatever is left, retained earnings, that's what can get distributed as a dividend. How to be corporation? I was self-contracted last year, and is there a way that I can lower my taxes for last year? Last year being 2022. So if in 2022 you were self-employed, you cannot backtrack to create a corporation because the year is gone. But what you could do right now is get your tax estimates done and contribute as much as you can into an RRSP. That way you can reduce the amount of taxes that you should be paying right now. It's not going to go down to zero, because the government is going to find a way to get its money. But the most you can reduce, like you can reduce more and more and more by looking at your personal situation, contributing some of it to your RSP. Another thing that that could work for some people is if your kids can work in your company, make them. If your kids can be employed in your company, make them. Especially for kids who have a low income or don't have any source of income right now, if they can do something which is reasonably necessary for the business, they are able to be employees in your company and they get to pay like very, very minimal taxes. But those payments that you pay to your kids as employees of your company, those are expenses in your company and they will be deducted. What age can the child work officially? I need to check that information, but don't quote me on this, but I'm going to check this specific information. For your kid to work for you, as long as they're providing a valuable service in the company, there's no age. But for your kid to go and work for a person who is not related to them, there are some rules and regulations around that. So if you have an office at home, or if you need somebody who is doing administrative work, let's say your child is the one who's answering all the phones. Your child is the one who's picking up paper for you. When your computer is down, it's your child who is fixing it and stuff like that. Those are valuable services that your child is doing for you. Most often we don't think that that is a valuable service because it's our child, but it is. And you can pay them a reasonable amount of salary for working for you. So anything under the basic amount is like $13,000. The basic personal exemption for taxes is about $13,000. So if you're paying them anything under, so between $10,000 to $12,000, it makes a lot of sense because they would not even pay personal income taxes on that, but they would have to pay like, I think they would have to pay EI and something on that, but they wouldn't have to pay personal income taxes. And the full $12,000 gets deducted as a business expense for you. The catch is it a relevant thing for your business? Becky has a hand up, Ama Becky, so please go ahead. What's your question? I'm asking you to unmute.
So my question was that I have a regular job, right? That I've been with for the past 2 years. And now I have also opened my own company, a staffing company, and it's incorporated. Now, my regular job, I asked them to now put my payment into my incorporation account, but they refused to, and their excuse was that there's no way they are going to pay my salary without deducting taxes from it. So now my confusion is if they deduct their taxes from it and put my salary into my incorporation account, then I will end up paying double taxes, wouldn't I?
Why are you putting it into your incorporation account? It's not an income to your corporation, it's an income to AMA.
Okay.
So the money that they are paying to you should not be put into your corporation. That should go into your personal income account. It should go into your personal account because you've already paid taxes on that.
Okay.
So when you're putting it into your corporation, you're raising a red flag for the government to look at you to say, but why is this income in your company not taxed? When it shouldn't be at all, because it shouldn't even be in the corporation. So if they are willing to pay you through your corporation, number one, they should not deduct any taxes from it. You should be giving them a bill for your services, and they would pay the bill to your corporation without deducting any taxes. If they are deducting taxes, then they are considering you as an employee. And so that employee income should go to your personal account. It shouldn't go to your business account.
Okay, thank you.
You're welcome. What are the methods of paying yourself and your child? Can you pay by e-transfer or direct deposit? You have to set up a payroll. You have to set up the payroll for your child, and whatever the net it is, that's what you're going to be paying. You can pay by e-transfer the same way your employer pays you. You can, or used to pay you. You can pay by e-transfer, you can pay by direct deposit, you can write a check, which they are then going to take and deposit into an account which is in their name. The account should be in their name. The good thing is, even if you pay that money to the child and it gets into their account, and now you wanted to say it's Christmas time or it's whatever time when you want to go buy things for your kid, and you're taking the money from their account to go and buy, the money still came from you. You're just doing smart tax planning to pay them and then use the same money to spend on them. Can your 7-year-old work for you? Yes. Are they providing valuable services? So you have to be able to justify that the work that they are doing is necessary for your day-to-day business. And you're paying a reasonable amount of the salary. So don't go put a 7-year-old and you're paying them $20 an hour. Doesn't make sense. Somebody else in the market can provide you that service more efficient than a 7-year-old for the same price. But let's say you're paying your child, let me give a number, $7, $10 an hour. Nobody in the market wants to accept that price, but this is a service that you need to run your business. And so you're hiring your child to do that thing. And at the end of the year, the total of their services might end up being like $10,000, which will be deducted to you, but nobody in the market would have accepted that $10,000 to work for you for 1 year. My daughter and I have a joint account. Can I use that account to pay her? No, put it in an account in her name. Because you have to be very clear so that the government doesn't look at it like you were just paying yourself and pretending that you're paying your child. It has to be in an account that is in their name. What is the advice on paying yourself from your corporation? Salary, as an employee, or as dividend? For that question, it depends on what your situation is. So the only two ways to pay yourself from your corporation is as a salary, as an employee salary, salaried employee, I'm sorry, or as a dividend. Now, which one is better depends on your personal situation. Is that your only source of income? If that's your only source of income, then, and are you looking at maybe down the road, you're going to go on maternity leave or something like that? Because if you're going to go on maternity leave, then you need the government to be able to pay you while you're on maternity leave. So you want to contribute to EI. And if you're going to be thinking about EI and QPIP or Canada Pension Plan and stuff like that, then salary to a certain dollar amount makes sense. And then the rest of it can go as dividend. But those are things that would depend. It would depend on your personal situation. Next question.
Hey guys, so we are slowly coming to the end of the Zoom meeting. Please make sure you take Ida's contact so that I can contact her personally for more accounting services. We have about 10 minutes more.
I think we have about 4 minutes.
Okay, 4 minutes.
So I just dropped my chat. Actually, I sent that to one person. I'm about to put my phone number. My phone number is actually on the flyer and my email address is on the flyer. So what you can do is actually, you can book directly on my calendar and get on my calendar, just whatever spot you find, it fills up really fast. If you find a spot on my calendar, just grab it so I can get on a call with somebody and go deeper with them and help them on certain things. So let me see, I'm just gonna drop my calendar. But in the meantime, if there's any other questions, please feel free to ask. So based on the example you used of a corporation making 100 with paying salary of 50 and other expenses 30, does this mean that the corporation will be taxed on 20,000? Yes. The corporation will pay taxes on 20,000. But if you were an employee making $100,000, you would be paying taxes on the $100,000. You're very welcome. We still have about 3 minutes. How do you set up EICPP? That's through payroll. So number one, you can contact a payroll service provider company to set that up for you. Or you could do it within, like if you have like QuickBooks, you're able to set up payroll. Sorry, I need to shut my phone. If you have like QuickBooks, you could set up salary through your QuickBooks file. And those are things that I'm able to do.
Yeah, we're also gonna do a Zoom about QuickBooks, right, Ida? I think we spoke about that.
Yeah, we spoke about that. So that's something I'm able to do. Yeah. You know what? I'm trying to find here my thing to share a calendar link. If anybody wanted to jump on a quick calendar, like pick up time on my calendar. It fills up really fast. So if you see a spot there, just take it. Let me see here. But if there are any questions, please keep going. I'm looking at the screen, but I'm not quite because I'm on another window right now. Okay, so I dropped my calendar if you wanted to grab a time there. Can you also do payroll through CRA, or is that something different? CRA doesn't do payroll for you. Well, actually, let me take that back. There is a calculator on the CRA website that would allow you to calculate the amount of tax deductions that should be done. But it's very manual because every time you come there, you have to re-input the information that's like a year-to-date information and everything, and then it's just going to give you the tax amount. You still need to then go ahead and make your tax payments, which is the payroll tax deductions, and you need to then issue the check to your employee. So it's very manual, it's very time consuming to do it, but it's possible to calculate it using the CRS calculator. They will not do payroll for you. They just give you like a tool that you can calculate your information. Well, 1 minute and counting down. Is there any final question?
So as a travel nurse, we fall under corporation. Is that correct? T2 is the form?
If you're filing as a corporation, yes, it's T2.
Okay,
And one
thanks.
thing I wanted to just add there, personal income taxes are considerably less expensive compared to doing your taxes for your corporation. That's something that people get shocked with. It's like, oh, how come it's so expensive to file for corporation? Because it's different, it's a corporation. And so just so you're aware that corporations get to pay more for the accounting services for filing versus what an individual would pay in general. You're very
Thank you
welcome.
so much.
And what are we looking at? Hello?
Yep.
So what would be the amount for a corporation, a fee for a corporation versus a sole proprietorship?
It varies. So most sole proprietorships, because it's part of your personal income tax filing, it's filed anywhere between $100 to